My dear children, today in this module, we are going to study the term depreciation. As we know, depreciation means decline in the value of fixed assets. The assets of the company can be divided into two, fixed assets and current assets. Current assets are the assets which can be convertible into cash within 1 year. But fixed assets are the assets which can be used for long-term purposes. Fixed assets can be again divided into two, tangible assets and intangible assets. The various examples of intangible assets are patent, goodwill, trademark, copyrights, etc. The various examples of fixed assets are plant, machinery, building, furniture, loose tools, etc. Depreciation can be defined as decline in the value of fixed assets. According to the American Institute of Certified Public Accountants, that is AICPA, depreciation accounting is a system of accounting which aims to distribute the cost or other basic value of tangible capital assets less salvage value over in a systematic and rational manner. It is the process of allocation, not of valuation. Depreciation for the year is the portion of the total charge under such a system that is allocated to the year. Now we are going to study the important causes for depreciation. The important causes are, first one, by constant use. The loss in the life, efficiency and utility of fixed assets due to its constant use is termed as depreciation. And the second point is by expiry of time. The effective life of the asset goes on decreasing with the passage of time. If certain lease has been obtained for 20 years for rupees 1 lakh, it will lose its 1 by 20th, that is rupees 1 lakh into 1 by 20, that is rupees 5,000. Value at the end of the first year and so on. At the end of the 20th year, it will become valueless. And the third cause is by obsolescence. The old assets will become obsolete due to new inventions, improved techniques, and technological advancement. Another cause is by depletion. As we know, depletion means decrease in the value of natural resources. The natural resources may be mines, quarries, etc. The loss of mineral wealth due to constant working of mines is also depreciation, but especially it is known as depletion. Then another point is by permanent fall in the price. Through fluctuation in the market value of fixed assets, it is not recorded in the books. Sometimes we have to account for these loss, such as permanent fall in the value of investments. Now we are going to study the need for charging depreciation. The recording of depreciation in the book of account is very essential. The important points to be considered while charging the depreciation are, it is for charging depreciation for determination of net profit or net loss. The loss in the value of assets is an business expense. It must be recorded and shown at the debit side of the profit and loss account for the correct calculation of the net profit or net loss. The net income is the excess of expenditure over income. This objective will not be achieved unless we account for depreciation in the books of the accounts. Then another need is for showing the assets at fair and true value in the balance sheet. If depreciation is not charged, the assets will be shown at the value more than its actual value. The purpose of recording assets is to show them at their true value. Provision for depreciation reduces the value of assets with the amount of depreciation, and the assets are shown at their true and fair value. Another point is provision of funds for replacement of assets. The assets acquired and used in the business will become useless after the expiry of the estimated life or even we will have to replace the obsolete assets with another fresh asset. The replacement will require funds. Proper method of depreciation will make the funds available for the purchase of fresh assets. Another important point is it helps to ascertain the accurate cost of production. Depreciation on factory plant and machinery is a factory overhead. It will increase the cost of the production and the price of the commodity will be fixed at higher rates. In the absence of the provisions for depreciation, the sales price of the commodity will be fixed at low rates because the cost of production will also be lower due to ignorance of the depreciation. Thus, the profit will be reduced. Another important point is distribution of dividend out of the profits. Depreciation is charged out of the profits and losses, so the net profit after charging depreciation will be lesser. Shareholders will get a fixed amount of dividend out of the profits. If depreciation is not charged, the profit will be more and the excess dividend will be paid out of capital, which should have been paid out of the profits. Then the last point is avoiding overpayment of income tax. If depreciation is not charged, the profit and loss account will show more profits. We will have to pay more income tax on this profit. In this way, the payment of the tax will definitely more than what should have been actually been. The profit will reduce with the amount of depreciation, so lesser or the actual income tax due will be paid. The provision for depreciation in this way avoids overpayment of the income tax.